what is the 15-second elevator pitch? Tokenized energy is providing simplified direct access to oil and gas deals. And you can do it at $1,000 increments.
Welcome back, everybody, to another episode of the Real Deal Landman Show. We are excited to be here today. And, normally Jairus and I start with as what we've always heard the audience loves, and that is between 40 minutes and 3.5 hours of just banter back and forth. How is the weather? Spring has sprung in Oklahoma, tornadoes everywhere. And so all the newscasters wearing their sparkly ties out in full force. I feel like most of the audience here is kind of that core, oil and gas demographic where they've been in Oklahoma and everything. You guys totally understand that is the main case of that's our excitement here. That is 100% sharing our weather with other people is 100% what we really get behind. But we are not here to talk about the weather. We're here to talk about some really, just like always, some very interesting guests. One of which, Tim Pawul, is back. You might remember him from an earlier episode of the Real Deal Landman Show, but we are also joined by Adrian Macias and Chip Simmons from Tokenized Energy. And guys, we are super excited to have you on here. Thank you so much for taking the time. This is one of those things where I got to be honest with you. I know my area of expertise, and Jairus would say that it is very narrow and very limited. And I just want to make sure anyone watching on or not watching on the video knows that Jairus is nodding his head very, very impactfully here. But one of the things that I always see online and I always try to learn more about is kind of the token, the crypto, just all of these different new things that people are building and getting into. And I think it's one of the innovative topics that's been around for just like very few years. And so like myself, I think a lot of people listening in today are going to be learning a lot about this. And so we're really excited to be able to talk to you guys and kind of get into depth and find out what you guys have done. I would say, first off, let's do an introduction of Tim. You've been on the show before. Just give us a real quick background of you, just to reintroduce you to the Real Deal Landman audience.
Yeah. So run Minerals and Royalties Authority, kind of in all things minerals and non-op investment bank, boutique investment bank. I started 6 years ago. The interesting part about where I sit in the space is anything innovative usually crosses my desk at some point. People want exposure, they want advice, introductions to investors, or anything in between. And that is a really cool seat that I'm very grateful for, because the smartest people in the space are always passing their ideas by me. And that there was no exception here with Adrian and Chip. They were working on something really forward thinking. It's a first mover opportunity. I'm not going to lie. First few conversations, I walked out of the meeting with Chip and Adrian. I was like, man, these guys are a lot smarter than me. I don't know what the hell they're doing. But as I started to get my thick head around it, I said, wow, this is something I'd like to be a part of. So how long we've been together, guys? Maybe 3 months.
Yeah, right around 8.
Yeah. So
Nice.
locked arms with them just to help get the word out and help educate. I think a big part of this is distribution and education, which is a skill set that I have, through my platform. But just excited to be a part of this and making it grow over the upcoming years.
Absolutely. And for you all recognizing Tim and hearing his voice, like you will recognize him from his podcast on the Mineral and Royalty Authority, which has done absolutely fantastic. If you haven't checked it out, make sure that you do. Adrian, wonderful to meet you too. Tell us a little bit about yourself.
Yeah, thanks for having me. I'm based here in Fort Worth, Texas. That's where we office. Aaron McCammett, our other partner, is also here in Fort Worth. Aaron and I both actually started off together at Purple Land Management, land service company, sort of a giant mega broker. We were two of the first guys to join that company back in 2010, 11. We had one client in one basin. It was Chesapeake, and we kind of rode Chesapeake's waves like so many other sort of brokers who just kind of caught fire around Aubrey and American Energy and all the kind of different subsidiaries. And so, got to develop some unbelievable relationships, not just from sort of the Chesapeake family tree of in-house guys in Oklahoma City and kind of all over America, but also just hiring landmen out of colleges all over the country. I've really just built a good network of people that I've spent, a lot of time with on projects or, sitting in their offices, as a consultant. We sold that company to private equity in January of 2018. I had a small ownership stake, a couple other just really good partners. It was a young, energetic company. Learned a lot there. But what I didn't really learn is sort of how to structure oil and gas deals. We lived in a world of run sheets and title orders and deadlines and due diligence and stress, but I wasn't really on the other end of the table learning, hey, why is, this deal good? Why is that deal bad? Why is this guy paying X and that guy can't pay that? And so I really wanted to learn that. And the only way to do that is to, go to kind of join the other side of the table. And I did that with Chip. After we sold Purple, Chip was literally my first phone call, just, called him to say, I'm thinking about making a move. And, the next day we had lunch, which turned into a 5-hour whiteboarding session and thinking about different things we could do together. We had a great relationship going back. Purple was a consultant for titanium, which Chip will talk about, but we did a lot of work with them in Oklahoma and elsewhere. And so got to, really spend time with him and knew he was someone I would, learn a lot from, but also want to partner with. And I think we're both just very entrepreneurially minded. We're open to new ideas. We, kind of go down rabbit holes sometimes, but when we sort of focus in on an idea like tokenized energy, I think we execute really well as well. So I've really enjoyed working with Chip, been with him for now 10 years. I'm at different capacities. And, shortly after I left to Titanium, Aaron McCammett joined us as well. So he's now our partner with Tim and Chip at Tokenized. Aaron is the guy behind the scenes. If you combined him and I, we'd be like a really good landman, but really like the deals. And I mean, I love deals. Like I'm just out there, I'm making the calls and the texts and running to Midland for the D bar at 2 a.m. Like I love the deals, but I don't like the documents. And so Aaron is sort of my better half when it comes to executing on the land side. That guy's just a machine. I've never, worked with hundreds of landmen at Purple Land. Just never met anyone like this guy. He can, close 22 deals on a Monday, with one coffee. Like, I don't know how he does it. But so anyways, that's Aaron McCammett. And unfortunately he couldn't join us, but I'll let Chip talk about his background.
Fantastic. Thank you, Adrian. And I mean, Chip, it sounds like you've got an amazing team, and it also sounds like everybody has very high praise for you. So bring it home here.
Well, they're being kind since we're on a podcast, but it's no, the day that Adrian and Aaron called was certainly a highlight of my career. I was thrilled. Purple handled all of our M&A work for a long period of time, and it provided a good way to get to know them. And so deciding to become partners was certainly an easy decision from my perspective to have them on. Aaron's awesome at what he does. I would echo everything that Adrian said. As far as Adrian goes, he's, one of the best connected people in the business. So together, I think we work pretty well. And we were thrilled when Tim called and wanted to join the mix because he brings a network and a personality and a mindset that's unique compared to all of ours. So together, we love the dynamic. I guess historically what I was is a, PE backed, oil and gas guy. And so worked for, we were backed by 3 different PE funds over the course of the last 20 years. So we started with Reservoir Capital out of New York. We built and sold 3 companies and did one mezzanine investment for them. We then went to Castle Lake Funds, got $300 million commitment from them. And then ultimately Varde Partners, where we deployed another 200. So all in that chapter deployed probably $750 million, 3 different PE funds. And then when we saw that coming to an end, we formed 2 companies, Desert Gold and Tokenized Energy. And so Desert Gold has been very active in a land capacity, and we've had a lot of success with that company recently. But then Tokenized Energy, and which is what we're here to talk about. So we all come together with a lot of experience in the oil and gas space, and we started realizing why do folks hire us? Why do people want to put their money to work with us? And it was really all about access. And so simply put, what Tokenized Energy does is it puts oil and gas investing in the palm of your hand. There's a website, there's an app on the App Store, there's an app on the Google Play Store. And so the sort of thing that we deliver to you at the end of the day is access to opportunities that either you don't have, or you can't afford, or you don't have the time to source and evaluate and do the paperwork and run the title and manage the asset. So it gives you the access to those opportunities. That's really what we do.
Very interesting. Go ahead, Jairus.
How is this different than people who want to pursue their own deals and they want to look for opportunities to buy minerals or royalties or non-op interests? What is the appeal that Tokenized has versus those traditional methods that a lot of people pursue?
Adrian, you want to take that one?
Sure. Some guys can do it on their own, right? If I know a lot of mineral guys who are able to go out there and value a deal, buy a deal. They have buddies who are maybe engineers who they can ask for information on reserves. You kind of pull it together. But there's a lot of reasons why most people can't do that. One, deal sizes, capital. These deals are not cheap, generally speaking. It takes a lot of money, especially on the non-op side. You might have a couple of acres, but that might equate to 150 or $200,000 in capex. And so, generally speaking, individuals, can't write a check for an entire deal without sort of passing the hat around. And so cost is one issue. The other issue is what I hit on. On the non-op side specifically, to go hire an engineer to evaluate a deal, costs a couple $1,000s at least. You have to find someone who knows that specific area. You have to go and find the deal, and you have to bid the deal. You have to negotiate the deal. You have to paper the deal. You have to manage the deal. There's all these different layers of things that you have to do in order to have direct access to these opportunities. And again, some folks can do it. I'm a big believer that when and I have a lot of buddies in oil and gas and have been around it now for 15 plus years. When I'm at a conference, I'm convinced 9 out of 10 guys there don't own a single NRA, or don't have a single lease in their own name. They may be managing, billions of dollars of assets for Chevron or for Apollo or for whatever, giant private equity group they're working with. But they don't get mailbox money on the first of the month from, ABC operator out of Midland County, because to do that takes a lot of time, energy, and resources. And a lot of people just don't have the ability to do it for those reasons I kind of laid out. And so what TKE really is, you log in and there's a menu. Hey, there's a Midland drilling deal, Utica drilling deal, maybe a mineral deal in Oklahoma. And you can kind of cherry pick. Hey, I'd love to have exposure to these minerals in Stevens County. I'd love to have exposure to this operator in the Utica oil window, and you can right size your pocketbook around the opportunities, build a portfolio, and understand that the deal is completely baked for you. You don't have to negotiate. You don't have to retrade. There's a price. It's set. There's no hour knife fight from the broker in Lee County, New Mexico that we've all had to deal with. It's just there and it's done and it's ready for you. You don't have to deal with checks and stamps and anything like that. You click through it all. And once the wells start paying revenue, you literally get a push notification that says, here's your distribution. Here's your revenue back. And you don't have to deal with sort of all of the nonsense that goes alongside with managing and evaluating these deals.
Yeah. The other thing I'll do to jump in, just because part of my business at Minerals and Royalties Authority is raising capital for minerals and non-op funds. So let's just say, for all the things that Adrian mentioned, is why people end up being LPs and funds. They don't want to deal with sourcing, underwriting, managing, et cetera, but they want exposure to it and they're happy to have someone else manage it. Well, it's usually $500,000 minimum check, right? For funds that are 100 million plus, it's $1 million minimum. So there aren't a lot of people in our industry working for companies that are able to stroke that check. Now, could they stroke $1,000 check or a $10,000 check? I mean, to Adrian's point, we've started to ask this question and we've been shocked about how little in our space people actually have direct exposure through funds or through assets. And if you think about how many people make, call it 125 grand to 400 grand a year working for oil and gas companies, how many of those people might have 5 to 50 grand a year or maybe a little more to invest into uncorrelated, non-publicly traded securities, i.e. minerals and non-op? The answer is a lot of people. That's what we're really excited about. And you can do it in increments of $500 to $1,000, which you might have a little bit laying around here. You might have a bonus. You might have a big commission, and these deals are going to continue to be on the platform. And then if you're there and you're able to look at it and you have that dry powder available, you can jump in. And that's something that doesn't really exist. And I can tell you, just there's been lots of people that I've shared deals with or work deals with, and they're like, "Hey, we want to start, owning stuff on our own," but they just don't have the money really to do it
Yeah.
because you need a lot of money to jump into a deal. It's very difficult to find a good quality deal that's $15,000. The costs are going to prohibit doing it.
Or if you're bidding on EnergyNet, it's win or go home. You've got one guy that leaves that bid happy and everybody else leaves disappointed. So we're kind of trying to serve the market of disappointed bidders in a way, people that either don't have the checkbook or don't have the access or don't have the time, whatever the reason, to go achieve those opportunities. And we do that for you.
Well, think about this. I think the market's efficient enough to where there aren't quote unquote steals where you're making like a four bagger on the buy. Um, we've all worked deals and people always want to know what the price is. And I remember when I started my career, a lot of people are like, oh, I don't want to name the price because then maybe we're leaving something on the table. The reality is most people want to know what the price is to know if it's worth their time to look at underwriting the deal. So we've gotten some feedback from folks that love the structure we have because they could go on, and if in 10 minutes it's very clear that this doesn't work for them, they can go pencils down. It's not like you're going all the way through and then you're negotiating, you're going back and forth, and then it falls apart, and you're hiring a landman to do title work, and you're hiring an engineer to underwrite it, and there's some sunk costs. So I think that part of it is, in the world where everyone has their main job and they want to do some deal stuff on the side, when you have that time, it could be 1 a.m. on a Friday. You could go in to Tokenized Energy, look at the deals, dedicate the time you want to dedicate to, and if you like it, you hit the button and then you're in.
You're in a deal in minutes if you like it, and depending on how much work you want to do. But just actually, Tim, something I just thought of that I hadn't really thought about before, but we apply the same sort of underwriting discipline that we always did when we had to answer to private equity. We've never had, and this is the thought that Tim just spurred in me, we haven't had a single person yet. We've closed 2 deals. We've got 2 that are live on the platform right now. I haven't had a single person say to me, that's overpriced or the terms make no sense. I mean, Adrian, have you? Tim, have you? I haven't had a single person say that. Which is kind of interesting, right? Because in our industry, we're often not of one mind. I mean, you can get 2 reservoir engineers in the room and they can't agree on what, PV 15 should be of those PDP cash flows. I mean, 2 smart guys or gals can't agree on something like that. You would think there would be different points of view on the prices that we've negotiated and captured these assets at, but quite frankly, now that I think about it, not one person has said that to me. So
maybe we should be charging more.
I think we should. We clearly aren't pushing the envelope hard enough.
Oh my gosh.
So again, first off, like I think I can freely admit here, I'm 45 years old and I'm not retired, and every day that angers me. And so I'm always looking for good investment opportunities. So when we're thinking about this and like the common man such as myself, is this closer to having the ability to have a working interest in a single well, multiple different wells, or is it closer to owning stock in multiple different companies? Or is that a bad analogy?
No, it's actually a great way to ask the question. Nobody's ever asked it quite like that, but it is direct access to those opportunities. So it's very unlike, owning a stock. So what we do is we take the investment opportunities and we put them into SPVs, special purpose vehicles. And then what we are tokenizing is the equity in that SPV. And those SPVs are pass-through entities. We pass through the intangible drilling costs, so you get all the tax benefits, but you're getting direct exposure to whatever that SPV owns. So when you invest, you know exactly what you're investing in. It's not a blind pool fund. It is if you want to take concrete examples, for example, like our second deal was the Spyglass wells operated by Oventive in Midland County. And when we these were 5 different wells that were targeting the 5 main reservoirs in Midland County, everything from Wolfcamp A to the Joe Mill Reservoir. And so 5 wells, 5 targets, When we posted it, the wells had been drilled but not completed. So actually the timing was quite good because then you don't have to wait very long to get some feedback. But when we put that non-op working interest into an SPV, and you could invest, when I say directly, you do have to go through an SPV, but there's some other sort of mechanical reasons that aren't worth explaining why you have to do it that way, as opposed to just transferring the non-op working interest directly to those people who then may not know how to manage it, may not know how to deal with it. So, but also when it comes to tokenization, if you're transferring title, if someone wants to sign, like, you've got to make a filing, you've got to notify the operator. So it's not very convenient to put them into actual investors' names. You kind of have to put it in an SPV. So that SPV, though, is a pass-through entity, and it's the only slight, bump in between you and the actual asset. So it's a great question, Drew, because it's way different than buying stock in ExxonMobil. I mean, if you buy stock in Exxon or Diamondback or whoever it is, you do have the winds of the market blow in different directions that have nothing to do with your investment. It can be something unique to the oil and gas business. It can be something unique to the equity market. It can be a function of Trump's last tweet that has an impact on the value of that stock. But when you're asset level investing like this, you're detached from all of those influences on your valuation.
From the operator standpoint, what are they seeing on their end? Like, do they
They
see all
see
these
that
investors as
that
owners in their
SPV.
decks? Okay, they
No,
just
they
see the
just see that
SPV.
SPV. I mean, that's the only entity that owns. So we're no different than any other, non-op working interest holder.
And then in terms of the investment opportunities that are out there, in sourcing them, do you have people that are trying to bring those deals to you that you guys will acquire and create SPVs around, if I'm using all that terminology correctly, or do you prefer to do that on your own? How does that process work in terms of opportunities that are going to come through the platform?
Well, it's really both. I mean, because we've been around a long time, and Adrian's sort of the tip of the spear on the deal front. So he originates a lot of things through proactive BD efforts. But because people are aware of who we are and who Adrian is, we get a lot of inbounds. When we formed the platform, we started getting a lot of calls about people wanting to sell interest in their assets. And we haven't done that yet, but we can see that as a use case developing over time. But Jairus, it really works both ways. I mean, Adrian either reaching out or people calling him, it works both ways.
With all of that inbound and the vast number of potential opportunities that could enter the platform, what is the vetting process that you take, or what is criteria that you guys look for to where you want to make sure that the opportunities that are on the platform are true quality investments that people are going to be able to take advantage of?
Adrian, do you want to take that one?
At the simplest level, it's something I would invest in personally. And all deals that are on the platform now, I've personally invested as a user on the platform separately from being involved with it on the origination side. Trying to find things that everyone who works in oil and gas would recommend to their boss. We should participate in this deal. Those are the kinds of deals. That's how we're wired. We're comfortable evaluating opportunities. We obviously have engineers, people we work with that we trust, that we have longstanding relationships with in different areas that we work with and hire and engage to help us. But the way I see it is if I wouldn't want to put money in it, I wouldn't expect anyone else to put money in it at the same terms. And so that's kind of the mentality we've had. I will say we're trying to get more diversity of deals. We're trying to get some more mineral deals on the platform. We want to have, gas deals, LNG deals, new drill deals, PDP deals, and get a better sense of what the market also wants. We tend to think maybe because Chip and I are sort of hardwired in non-op that a new drill is sort of the most exciting thing to do. It's more fun. Right now, we have a deal on the platform today where a public operator, Gulfport, put the rig on last week. And to me, there's nothing better than the rigs on site, gas wells. They're going to come on, and it's a good environment price wise, generally speaking. So, no, we're looking for high quality operators in good areas, de-risked. We're not putting up wildcat stuff. We understand there's sort of a whole other market out there for some of those opportunities. And I'll say never say never. Some of those opportunities out there kind of on social media platforms may or may not work. I have honestly not done the work on those, but what I can say is we know ConocoPhillips in Lee County is probably going to work. And we know Oventive in Midland County, 2 miles from the
Yeah.
airport, it's probably going to work. And we know Gulfport in Belmont County is probably going to work. And so we're putting very high quality assets on the platform.
Jarek, the other way we think about it is that we do apply that underwriting discipline that we have forever. So we're often looking for at least a net 20% rate of return to sort of meet that hurdle rate based on our underwriting. But as Adrian said, we're also trying to put all the different asset classes. So depending on where you are as a personal investor on the risk reward spectrum. But because of some feedback we got, we also acquired a small PDP deal because some people said, well, I don't want new deals. Give me PDP. So I thought, all right, we're going to test that. And we put that on and the reception has been quite good. People like it. So we're going to test all the asset classes because we don't want to sort of superimpose our risk appetite onto everybody else. Because as Adrian said, we like the new drills.
Well, I think what's interesting as well is I think going forward, and this is really what blockchain and tokenization and everything in the digital investment world is about, and that's giving optionality and removing friction, removing middlemen to the individual investor. One example in our framework of how we're doing that is you can piecemeal your portfolio together to your liking. So that could be capital availability throughout the year. That could be by basin. That could be by operator. I'll give you an example. This PDP deal that Chip's alluding to, um, it's an oil cash flow deal, and oil was $60 when it was underwritten and put on the platform. Oil has been over, between 90 and 115 because of the Iran war. Well, the way the platform is, that deal's up there. It's not like it's changed. Whereas in a live deal, you might get some retrading. So if you start to say, hey, wait a second, I want exposure to oil cash flow right now, given what's going on macro wise, you can go into a more cash flow heavy deal. If you want something happens, you see an announcement with data centers or whatever, you want to go more on the gas side, or you want, there's inflation goes through the roof, something Trump does, and the markets go crazy. Hey, I want to own, minerals and I want an inflation hedge. So you can be the architect. Everyone's preferences are different. I think that's what's really cool is you can build your own portfolio where normally you have to let someone else do that. And it has blind pool aspects to it. The other thing I want to mention too is whenever you get anything that's online, and especially where the minimum investment size is smaller, there's this unspoken assumption that you're trying to get unsophisticated money. And to Chip's point and Adrian's point, we're underwriting deals to the threshold that they've had for private equity sponsors their whole career. All of our investors to date have been oil and gas professionals. So what we're trying to do is play the long game to give real opportunities to professionals that have a good experience that then want to keep putting their money up deal by deal instead of, trying to fleece someone and get the cheapest cost of capital out there. I just wanted to mention that because if anyone here is listening, they'd be like, well, I'm in the space though. Like, am I going to get a 7% return when I know these are 15% return deals? That's not what our motive is.
Sure.
And so we encourage you guys to check it out because I think when you look at all the deal flow in the market and ways to fund it, you always want to unlock different pools of capital. And I think because of barriers of entry, this is an untapped pool of capital. It doesn't necessarily mean it needs to be the cheapest pool of capital. It's just an untapped pool. And we want to unlock it through the technology that we built.
Yeah, Tim, I appreciate you bringing up some of those points that you just expressed. But to dumb this down a little bit, it may have been mentioned, but if not, just in case, or maybe to explain it a little bit deeper, is there like a cryptocurrency or blockchain component to this, and how does that work?
No, well, there's a digital asset. We don't use the word crypto because that's a dirty word, Jairus. So, so we don't use that. But one of the reasons we've focused on what it is that you can get, it's much like we think people should focus on the outcome rather than sort of our method for delivering that access. It's sort of like, your car can take you from A to B, but you don't really know how it works. And so we would encourage you to focus on how you get, about the fact that you get from A to B, and a little bit less on the guts of how it works. But in terms of the guts of how it works, and so when you sign up for an account on our platform, you go through all the typical sign up stuff that you do on any site. The very last step is that you create and attach a digital wallet. If you have an existing Ethereum compatible wallet, you can attach it, or we're integrated with the Coinbase wallet service that they call Base Account. You can literally in 3 clicks create your own wallet and attach it to your account. So then you get 2 things from us. The first, you get 2 different tokens. The first token you get is like a digital stock certificate. It represents your equity interest in the SPV that you've invested in. That'll show up in your wallet. It won't show up on, a Coinbase exchange, but it'll show up in your wallet. It'll be named by the name of the investment, and you'll see it right there in your wallet. The second thing you get from us, whenever those assets start producing, if they're not already, like if it's a PDP deal, then the operator pays us in cash. We convert that cash to USDC stablecoin, and then we distribute that to your wallet. And for those that are not familiar with stablecoins, they are USDC is backed and issued by a U.S. public company called Circle. That's audited. It's public. It's subject to the recent legislation on stablecoins, which means every stablecoin they issue has to be backed by a dollar in some form, often in the form of U.S. Treasuries. And so it's a dollar equivalent stablecoin. You can go on Coinbase or Kraken or Binance or wherever you have an account, and you can convert back and forth between US dollars and that stablecoin on a 1-for-1 basis. And all those platforms do it for free. So it's literally a dollar equivalent. So we'll put that USDC, which represents your distribution, right into your wallet, and then you can do whatever you want with it. Pull it back out, spend it. What a lot of people have done, I mean, we're young, but what happened was the last time we made the first ever on-chain distribution in connection with a non-op working interest to our first set of investors on the platform. So we were very proud of that. We're not aware that anybody's ever done that before. And immediately what we did and what several of them did is take that USDC and then reinvest in the live deals that were open on the platform. And so that's what we want people to do. We'd love for them to keep that stablecoin in our ecosystem and keep investing in our deals, but you don't have to. You can pull it back out to your Coinbase account, convert it to a dollar and withdraw it and buy something for the wife or kids. So you can do whatever you want with it. There's no restrictions on that.
There will be people who listen to this and they'll want to tell other people about what they heard. How do you want those people to explain what this is to other people?
I'd say by replaying your podcast or by listening to, Tim's podcasts, or we've also got a couple of how-to videos that are posted on the website and a pretty extensive list of FAQs on there, which explain sort of how it all works. And of course, we're happy to take calls or inquiries anytime. You can reach out to us through the website or through our LinkedIn's or, however you'd like to do it. But we love talking about it and open to that anytime.
Yeah, I mean, Jairus, to your point, let's just say someone listens to this, they're running into someone, they have 15 seconds and they want to say, hey, by the way, I listened to this really cool thing, Tokenized Energy. What is the 15-second elevator pitch? I think it's, hey, Tokenized Energy is providing simplified direct access to oil and gas deals. And you can do it at $1,000 increments. I think that would be just the simplest way. And if you're interested in getting oil and gas asset level returns outside, again, to our demographic, the people working for oil and gas companies, what are you doing outside of 401k investing? And if anyone has any additional money that they want to invest, I would say they would prefer to do it in something they really understand, like oil and gas. And outside of public equities investing, this is going to be the first thing at a smaller scale that you could do. The other thing, going back to my point on optionality, I think what becomes really interesting, because on its face, when you talk about blockchain, you talk about, digital investment and everything, there's a component that just increases transparency, reduces friction, and makes everything administratively a lot easier, right? So that's there. But then beyond that, why do this? And I think what becomes possible as the world starts to shift more and more towards the digital investment landscape is, again, this optionality. I'll throw a couple examples out, and Adrian, Chip, if there's anything else to add, please pile on. Number one is, if anyone in the audience happens to have digital wallets already and you have anything in those digital wallets, you can invest stable coins into our deals. It doesn't have to be cash. If you own Bitcoin or Ethereum or anything like that, you have any type of substantial crypto portfolio, if you never wanted to sell that, but you wanted to lend against it to create liquidity to then reinvest it into things, that's an option, right? We're talking to several people right now who say, this is super interesting. I have all this Bitcoin. I don't want to sell it, but like, I'd like to do something with it. And, that's an option. So once you're in this ecosystem, you can do other things. The other thing that's really interesting, I just did a podcast episode with a mutual friend of ours, Will Harris at Energy Substantiation. And what they're doing is they've tokenized a physical barrel of oil. They call it WTI coin. So let's take a hypothetical scenario. You like the return profile of a non-op drilling deal. You invest into it in tokenized energy. Tokenized energy then starts issuing USDCs to you, right? And let's make up the rate of return. Let's just say it's 20%. You like that. But then you go, man, I don't like where the US dollar is headed. I feel like with inflation, my real rate of return is being eroded. But I really like oil long term. I feel let's pretend it's $60 a barrel, and you go, I don't think oil is going to be $60 a barrel forever. I think it's going to go up. I'm bullish oil. You could take that USDC stablecoin and you could swap it for a WTI coin. And now you're taking your oil and gas returns and keeping it in oil and gas exposure for the dollar equivalent at the time. So the point is, you may or may not want to do that. But if you wanted to do that, that optionality exists in the digital investment framework, and it doesn't really exist in the quote unquote real world. And so I think there'll be more iterations of things like that, to where you have all this optionality once you have assets in your digital wallet and digital portfolio. And I think that was the hook for me to jump on board, because I said, oh wow, this is a huge market and a huge opportunity, and the world is going this direction. I mean, since I started talking with Chip and Adrian, New York Stock Exchange and NASDAQ announced they're going to tokenize their exchanges, 24/7 trading. You have all this legislation going through the USDC stablecoin market. I haven't looked recently, Chip, but 80 billion. I mean, and growing at a rapid clip. Like, the adoption is coming, and
It's over 300.
it's 300. Wow, that's incredible. So the point is this is not like a fad. This is going to be a part of our lives going forward, and that's just we're early movers on it for oil and gas, but it's coming.
It's way more prevalent outside the US. Like, tokenization is a very routine thing in Asian countries, for example. It's increasingly the case in the Middle East. It's one of the areas that the US is significantly behind, is in adopting tokenization. But even outside the regional differences, what you've seen, the very first things that get tokenized are the most commoditized things. Like, for example, bars of gold have been tokenized for years. Real estate, of which there are several analogies to oil and gas investing, but tokenization in real estate is more common than it is in oil and gas. But there've already been billions of dollars of financial products. The most simple ones, like U.S. Treasuries, for example. U.S. Treasuries and stable coins are the single biggest categories of tokenized real world assets, is what it's called in the digital asset space. So anything that exists in the real world that's been brought on chain is called an RWA, or a real world asset, which I always feel funny saying that to oil and gas guys. But when you're putting on your digital asset hat, that's what it's called. And so oil and gas is an RWA in the digital asset space. And so what you're seeing is the real world, being tokenized and brought on chain. And sort of the Boston Consulting Group has a famous study out there that all guys like us like to quote, but they're estimating, $16 trillion of assets being brought on chain by 2030. And so
Holy
that
cow.
that trend is underway. And so people that haven't heard of it before, they feel uncomfortable with it. But I'll tell you, just to try it, like, we already live in a world that, and the way we look at it is, the world is already a bunch of electronic debits and credits. Like, if you look at your bank account, I mean, I don't ever carry cash anymore. Like, from my perspective, we're a cashless society already. And I mean, the only thing you need it for anymore is tips. I mean, I just don't have any other use for cash. So it's already in your bank, and wire transfers are just electronic debits and credits. And so having a stable coin or a digital security that's evidenced by an entry on a blockchain, which is really nothing but an ownership ledger, to me, is, there's no reason to get your head bollocksed up around it, because it's just the next incremental step in technological advancements in the handling of money, because we're already an electronic debit and credit society. Or even if you think about it, like, you open up your Schwab or your Fidelity or your Vanguard or your State Street account, and you see 100 shares of Diamondback in there, that's just an electronic debit or credit at the depository trust company, who nobody knows where they sit or who they are or how they work. But when you open that account up and you buy or sell Diamondback, you trust that Fidelity is going to give you the right debit or credit. So in our minds, it's just a very small incremental advance in the direction we were already headed.
It's very
Awesome.
interesting. I mean, the innovation that you guys have done, somebody's got to be the first one out. And I mean, hats off to you guys for putting this together. This is really, really interesting. Is this considered securities in the eyes of like the SEC or anything like that? Or is that not even on
No,
here?
it is, because you're
Okay.
getting from us a digital equity interest.
Okay.
You're signing, when you subscribe to an investment, you sign all the same legal docs that you would if we were in a private partnership together and you were investing in one of our deals. So you have, and that's the difference, Jairus, you mentioned crypto earlier, but that's the difference between what we're doing in crypto. I mean, what we're doing, the digital token you're getting is like a digital stock certificate, and you have all the legal rights of an investor in a private partnership. There is no difference. That digital coin, and once people understand that, by the way, and the light goes on, then the adoption rate goes up. Sort of the challenge for us is educating people on this if you've never done it before, never invested through our site. But once you do it and you realize how easy it is, then you're going to go, oh, wow, like, why did I ever worry about this?
Yeah, I think that the learned behavior we're going after is it's just changing the psychology of the individual deal guy or deal gal or investor. And that's, if I wake up on a Monday morning, am I going to check the stock market? Am I going to check, Energy Net and Energy Domain and Oil and Gas Clearinghouse? And am I going to check tokenized energy? And we just want to get in that routine. And that's just a new learned behavior, because this is not a traditional form of deal flow, but it will be. And so we're working hard to change that, and it's already off to a good start.
Does tokenized energy, do you guys provide anything like, do you get any drilling reports, or if they go on your site, are they seeing any additional information for that which they invested in?
Yes, we provide daily production data, anything we get from
Nice.
the operator and are entitled to as a, non-op working interest owner, we make available to everybody. We will put their emails from the operator, AFEs, we're fully transparent, and it would be no different than evaluating a deal, under a VDR. We make everything available. We have a presentation and a financial model, and we've had many people, that are engineers at other companies, at public companies, who download our VDR. And as Chip said earlier, they've not really pushed us on our marks and our EURs and evaluations. We have had questions, on some of the assumptions we make, but we've had people ask for, hey, can you do a flat price case, flat 80, flat 60 for us, just so I can kind of run some sensitivities. But, we actually provide that in the presentation already, but we make everything available.
Very interesting.
This is incredible stuff.
It is. Really
I think we could keep talking about it for another hour, but want to let people get back to finding those opportunities and making money for folks. But yeah, so people can find you guys on tokenizedenergy.com, and sounds like you're willing to field conversations or answer questions and be able to help people get started with that. Any other things that people ought to know on how to get started quickly?
No, come on and open an account. They're that are open on the site right now for accredited investors.
Okay.
And so you'll have to go through some identity verification and accreditation verification, and then the digital wallet. But come on and do it. If you have any trouble, reach out. A lot of people have no trouble at all, but reach out if you need it, and we'd love to onboard you and look at the opportunities.
Well, I am definitely going to be checking that out, and we'll see. Hopefully, we'll be becoming a customer here in the near term.
Well, we'd love it. We'd love it.
Yeah, absolutely. Drew, any final words from you?
I always love, and especially on this show, I think the audience and everything, we love people that are blazing new trails. So Chip, Adrian, Tim, congratulations to you guys for starting this up. And we wish you the absolute success in going forward. Another episode of the Real Deal Landman Show coming to a close. Thank you again so much for all of our sponsors, for all the people listening. And don't forget to tell your friends about it. Listen to this episode. If you have any questions for any of these fine gentlemen, please reach out to them on LinkedIn or directly through their Tokenized Energy website. But until next time, for Jairus Johnson, for Drew Hopkins, this has been the Real Deal Landman Show. We will see you next time.
See ya.